Hello everyone, and thanks for tuning in for another Market Outlook by Exness. My name is Andreas Semistogleous, trading specialist here at Exness, and in today's video we're going to be checking on a possible trading idea for the next few days, the narratives behind it, and which economic data could potentially affect this trade. But before we proceed, let's check on the performance of last week's idea. Last week's idea was for a short on the pound-yen pair with a target around the 178 price area. The price moved to the opposite direction but is currently showing signs of correction to the downside, so the idea might still be valid and could potentially reach the target in the following sessions. Now for this week, we are looking at crude oil for a potential long trade with a target around the $92, given that the price makes a valid break above the 86 level. The price corrected from the low of last week at 80.70 and is currently trading around the very strong technical resistance area on the chart. The price area of $86 consists of the 38.2% of the weekly Fibonacci retracement level, the 50-day moving average, as well as the bullish trend line. This is why it is crucial for this area to be broken if the trade will succeed. There is also a support area around the $84, which further reinforces the buying narrative. The major factor that is affecting this trade is the concerns that the recent attack by Hamas on Israel could increase tension in the Middle East and affect oil output. This has raised fears of prolonged high prices and inflation, while Israel's conflict with Hamas could also lead to tougher enforcement of sanctions on oil from Iran, potentially affecting global supply. While there is little immediate threat to oil supplies, the market could tighten if the US enforces sanctions on Iranian oil exports more strictly. Another factor affecting crude oil price is the correction to the downside on the dollar index, which further supports the idea for a long trade on crude oil. In terms of economic data for this week that traders will be paying attention to are the Producers Price Index and the publication of the FOMC minutes on Wednesday the 11th, and also all eyes will be focusing on the US inflation rate, which is expected to be released on Thursday the 12th at 12:30 p.m. GMT. So in summary, the trading idea for this week is a long position on crude oil with potential target around the $92, given that the price makes a valid break above the $86 level. The main narrative is the tensions in the Middle East between Israel and Palestine, as well as the correction on the dollar index supporting the price of crude oil in the short term. The economic data that could affect this trade are mainly the American Producer Price Index, the FOMC minutes, and inflation data. Remember, this is not a signal, it is just an idea for a trade, it's not a guarantee of success. Always do your own research and remember to manage risks.